Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, we told you it was buy yesterday. We're going to show you exactly why we said that, and we're going to go into some charts and do some technical analysis for you guys. So let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
All right, Bob, let's show these guys the secret sauce today on, why we thought we were going to get a bounce, why we think we're going to continue to bounce too into some higher levels here.
Yeah, so what was really interesting today, well, actually, it started yesterday, Phil, and we had, and I'm going to get to these charts in a second. So we've noticed that there was dollar, I think, capitulation coming and a SPY capitulation. And then all of a sudden today, we've had them all like a jailbreak on the hourly. So first chart I want to show you is oil, because oil has been really a proxy for the dollar of late. We pushed past 2 weeks past normal, what I would call rotation in oil down into like November, but we just kept grinding higher. And then we had this blow off day, and that was yesterday. And then today we've given back 2/3 of that. And here's the chart. And just to show you guys, on the bottom is basically, you're seeing actually a visual of our algorithm, and the top is showing the price action and also the volatility stop. So when we got to midnight last night when Europe opened, they started selling oil off, which is really alarm bell, because the Europeans really drive the oil markets here, because you have the London traders, you have the Middle East traders out there, and they were determined to bring oil down today. Okay, that was number one. And you see here on our algorithm is that we had a 4 indicator confirmation, vol flipped. Our algorithm down below is there's 3 components to that, and then you saw the warning area there where that yellow area is, and we had red sell, and you should been, if you're trading it, you should shorted it, and if you're long oil going into yesterday, then first thing this morning you needed to close. But that's not the big point. That was just really more of a confirmation. Oil flipped. And then you had the stock market, which SPY is the next one, I believe, right, Phil?
Yeah, SPY.
Yeah, so SPY was more interesting to me, because we did the podcast yesterday to say buy, because we actually had a quad confirmation on a buy. And these are hourlies. These aren't 5-minute trades. These are usually should sustain for a few days. And we did. We drove that price right up all through the day today. We had a vol flip, we had a flip in our buy signal, and we said get long yesterday, stay long today, and that play is still valid, Phil. I didn't do a 4-hour chart, so what we need to find out tomorrow is, now we know if we break that vol stop to the downside, is that I would consider this a failure, and if we break over the vol stop 4-hour, which we failed to do today, then I think we continue on further, and you're going to talk more about the further after I get done with these charts. So the next chart is that, so oil reversed down, market liked it, SPY reversed up, market liked it, and now we have a volatility also flipped too. And so this is SVXY. This is what you trade. Most people don't trade the VIX. And again, look what happened yesterday. We had a flip in the VIX, the SVXY. And so this thing just drove higher. And again, it great move, finished close to the highs today. We're expecting follow through tomorrow. Same concept. We couldn't break the 4-hour, but we're above the 1-hour, and we're still in a all clear signal. But then the last one, which is one that actually didn't take shape until later today, Phil, is when we had the long bond flipped.
Mm-hmm.
So it was so funny, because yesterday the trolls were trolling us on TLT's buying, and TLT's morning's red, and then we got the reversal, and you need that reversal because that's what's been panicking the market.
Yeah.
Is the long bond blowing out. Again, same issue, above the hourly, below the 4 hourly. So for me, Phil, to stay in all these trend trades, which I am in all these trend trades, is that we need to see the 4 hour flip tomorrow and not have the hourly flip back down. If the hourly flip back down, then I think the trade's busted. But I think you're going to give me some encouragement that we're probably going to see a little bit more of a move here. So I'm going to throw this back to you.
Yeah. So if we go over to our live charts and why we were, kind of adamant about a bounce was that what we're going to take a look at here is breadth. This is the shorter term breadth on the S&P 500. As you guys can see, as we get into these green bands, you're going to get these pretty decent reversals. And in fact, that was our big reversal off the March area, several 100-point move higher, big low, swing low. And then you can see more recently, as we're rolling over, now we're in a mode of, bearish price action. So we're looking for lower lows and lower highs. But even in that condition, guys can see when we get breadth oversold, we're getting these, multi-100-point bounces happening. So we got another situation here. That's why we were saying, hey, be aware. We're on the cusp of a bounce. Same thing here. This is a little longer term breadth readings, but you can see we get down to these levels, right? Huge bounces in these markets. So again, here we are over here and we're bouncing off a trend line as well. So there's a lot of confluence on these things. If we move over to, our liquidity chart, haven't shown this in a while. Again, another measure of breadth here in the market, again, down between our oversold and capitulation levels. And you guys can see every time we've gotten down into these areas, you see really decent bounces. Here's an example where we came down into this. This was back in December. We chopped, and then we had a nice release back up. Here's another point in time where we got down. Here was a quick 2-day bounce, retrace, and then a much larger move higher. And this is kind of a situation we're in now where we're rolling over looking for a lower high because we've peaked, right? And even this gave you about 4 days of just straight up. So you don't want to be short in this condition. And that's why we were warning you guys that we're going to have a bounce. I think that we could potentially move up into 4,500. We got big resistance. That's where we broke down here. A lot of times the market likes to back test that. You guys can see here we have a larger head and shoulders pattern in the works. And a lot of times you will come back up and back test that a little bit. Bob, I think we're going to go up. But I think once we get into this October area, middle of October, I put this little down arrow here. The reason for that is because we're going to start getting into that longer dated issuance from Yellen. We've been talking about that. That really is going to start to manifest in here when those longer duration debt auctions start hitting the market. That's going to pull liquidity out of the market because those are not treated like cash like the short-term stuff is. And I think that's where you're going to see those auctions suck up the liquidity in the market. And I think that's why TLT was going down because it was front running this debt issuance. The thing you guys have to keep in mind is if you're gearing up for a recession, as far as smart and institutional money goes, you want to engineer a really good price for long bonds, things like TLT, right? Because why? You're going to go into that guaranteed return in the in uncertainty of a recession. So risk on assets are not going to give you any returns. They're going to be dropping. What's going to give you a risk-free return? 10, 20-year bonds, right? TLT giving you, over 5% returns for doing absolutely nothing. And on top of that, your bond face value is going to go up because it's been sold into that. So that's why, you guys have to think of it from the smart money perspective. They've been pushing down into this event. They're going to start buying this up ahead of a recession. It's going to be really good money for these guys. They're going to look really smart doing that. So that's what's been going on. And that's why you guys think, well, TLT is toast. It's not toast. They're engineering a move down into that $88 and $90 area. Last chart I wanted to show you guys was another one why we were warning that we could snap back up here in equities. This is the reverse repo. Okay. Again, this is not something that's always been around in these markets, but it is here now. It's basically a $1.5 to $1.7 trillion slush fund. It's been absorbing the short dated debt that Yellen's been pushing out since the debt ceiling's been raised. And we have one of these weird situations where we get a bit of a divergence from what the RRP flows are doing versus what the S&P 500 here in orange is doing. So the RRP flows are in blue. I've inverted it so that it moves with the market because it has an inverse relationship with the market normally. So if it's building, that's bearish for equities. If it's dropping or soaking up, let's say the short duration T-bills, then if it's dropping, it's actually bullish for the market. So I just flipped it so it moves with the market. But you'll notice here, back here toward the left of the chart, we had basically that alligator look, right? Equities in orange. What does it do? It's diverging. RRP is telling us we should have bullish flows. Boom. boom, we snap back up. Happens again here, boom, snap back up, and we're in that situation here. So that's why we could have a pretty vicious short squeeze rally all the way up until maybe the second week of October. It's very possible because of this setup. When we get this divergence, it's a pretty reliable setup. So Bob, that's what I wanted to share with these guys today.
Yeah, and guys, that's all I have. And I agree, Phil. Second week of October brings our new earnings season into play, brings the OPEX into play, and I think 200-300 point move in SPY really just brings us to another lower high. So
right.
So there it is, guys. We're still bearish as bearish can be, but we're trading it bullish because it's bull season right now. So if you like what we have to say, hit like, hit subscribe, hit notifications, and tell your friends. And the algorithm that we're showing here, we took it to the next level. We're going to be releasing that out to our customers. And for those who are, scheduled to be with us through 2024, they're going to get it at no additional charge. And if you sign up before the end of the year, you're going to get it without an additional charge too. So I take advantage of it. It's a really cool indicator. And I've shown it off to people today and did a couple nice sweet day trades with it for people. So it doesn't matter. It's time frame agnostic. So there you have it, Phil. That's all I have. And we'll have some great stuff for you tomorrow and on Saturday as well.
All right, guys. Thanks for watching. We'll see you on the next one. Take care.
Trade Genius.